Good morning, traders. John Caruso coming back to you here for October 5th, 2011, here to give you the opening comments in regards to the currencies and interest rate markets. As we come into this morning, we do have the dollar, confidence in the dollar eroding a little bit here. We're down about 50 points to 79.61. If you were tuned into me last week, I had targets set at 80.10, and those were achieved yesterday. We actually saw a high up at 80.43, but I did have some profit targets set at 80.10. In the U.S. dollar. There's some talks that came in late yesterday from Ben Bernanke. Another round of QE3 could possibly be in the cards for the United States. Also, the EFSF and the IMF are also coming to the aid of European banks here this week as well. And all of this is in the face of a credit downgrade from Moody's for Italian debt. So confidence eroding a little bit here in the U.S. dollar as we start the morning off. The euro is up 70 points right now, 133.05. Again, if you were tuned in last week, I did have a target set at 132.50. That was also achieved yesterday. We did see a low down in the low 132 range for the euro. So if you are still short that market, I'd be looking at tightening up your stops, or looking at maybe even just taking profit or selling some puts below that market. But I think at this point you do have to be careful, as I do believe we will see a pretty sizable rally here over the next couple days in the euro. So be careful if you are still short that market here in the short run. Taking a look at the Japanese yen, more sideways action. The market really has not moved. We have moved back towards the bottom of the range. We're trading about 130.28 right now. I still stand by my opinion that there is, threat of intervention from the Bank of Japan out there, and the market is scared to make that breakout to the upside. So I still believe the next big move in the Japanese yen will be to the downside, especially if we see confidence come back into the global economy here from the aid of the Federal Reserve, as well as the EFSF and the IMF. So if we see the stock market start trading higher, you see confidence come back in the commodity markets, I do believe you will see the Japanese yen lose its luster a little bit here and start tracking back down to the downside. I do have a longer term target at 126. Again, I said we're trading about 130.28, but be careful. We could get there in a heartbeat. It could happen over the course of a day or even 2 days, but we could get back to that level very, very quickly, as the Japanese yen currently trades at all-time high levels. Taking a look at the Treasury market, we are seeing the bonds falling way off of yesterday's high. Right now we're trading approximately 143.27 on the 30-year. Just the threat of government, Federal Reserve intervention into the marketplace with another round of QE3 is scaring some investors out of the safe haven trade, which was the 30-year and the 10-year. I do have a downside target here in the immediate future for 142.16, which is going to be our next level of support for the 30-year bonds. So that's all I have for you this morning. Feel free to give me a call, as always, 1-800-445-0567. And remember, trading futures and options carries risk and may not be suitable for all investors. Thank you.